Ian Shepherdson, chief economist at Pantheon Macroeconomics, said in a report last week that falling home demand is weighing heavily on house prices. We expect home sales to keep falling until early next year. By that point, sales will have fallen to the incompressible minimum level, where the only people moving home are those with no choice due to job or family circumstances, he said. Discretionary buyers are disappearing rapidly in the face of the near 400 basis point increase in rates over the past year. Economists at Goldman Sachs expect home prices to fall by a more modest 5% to 10% next year. Cities that saw the biggest increases in house prices last year are now seeing them return to earth, including places like Austin, Texas, Phoenix, Arizona, Salt Lake City, Utah, and Denver, Colorado. Home sales fell to 4.7 million last month, down 1.5% from August, according to the National Association of Realtors. Rising interest rates could further tighten supply. Mortgage rates have more than doubled this year. The average interest rate on a typical 30-year mortgage rose to 6.94% this week from 6.92% last week and 3.2% in January. The average interest rate on 15-year fixed-rate mortgages is now 6.23%, compared to 2.33% a year ago. Rising interest rates have forced some homeowners to put the brakes on selling their property because they would need to get a mortgage to buy another home as interest rates rise. It's entirely possible that even people who want to trade down will face a bigger monthly payment, Shepherdson said. That's a good reason to stay put, thereby constraining supply. The inventory of unsold existing homes fell to 1.25 million for the second straight month in September, according to NR data. The supply of homes for sale will likely shrink over the next year, Shepherdson predicted, while noting that prices have to fall substantially in order to restore equilibrium. We think inventory could increase modestly in the next month or two as homes sit on the market for longer, but new listings continue to decline as sellers retreat to the sidelines, Nancy Vanden Houten, lead U.S. economist with Oxford Economics, said in a research note. Economists expect mortgage rates to rise further next year as the Federal Reserve continues to raise borrowing costs to curb inflation. Rates could hit 8.5%, which would be another big shock to the housing market, NR chief economist Lawrence Yun told a group of real estate investors last week. Other analysts believe mortgage rates could go into double digits. Wayland Global Advisors expects rates to hit double digits by April 2023. Mortgage rates have not reached this level since 1989 when they were 10.25%. The highest mortgage rate in U.S. history was 16.64% in October 1981. Mortgage rates have risen by almost 3.8% since the end of 2021, according to Oxford Economics. Wall Street analysts expect the Fed's rate hike to add another 1.5% by the end of the year. At the beginning of the year, it seemed very unlikely that mortgage rates would push past 6%, Bright MLS chief economist Lisa Sturtevant told Realtor magazine. Now the question is, how high will they go? A lot of the answer depends on how aggressive the Federal Reserve is going to go on rate hikes in its next two meetings.